As you can see, war is coming, but will war crash the stock market and crypto and Bitcoin along with it? Today, we're going to look at what war does to the markets, right? A number of wars that happened in the past. And what we're going to look at is basically how do they affect the stock market first and then Bitcoin and crypto. Why is that? Well, because the Bitcoin and crypto follows, have you noticed, follows the stock market when it comes to wars, right? So basically when the war broke out on Friday around here, that's when the stock market took a dip and Bitcoin took a dip as well, right? It's been proven so many times in the last 3 or 4 instances, such as the Russian-Ukraine situation, such as the last time Iran and Israel bombed each other. I don't even mean like this week. I mean like a year ago when this happened. Every time this happens, stocks drop, oil spike, and this thing and Bitcoin takes a dump. It may not be huge, might be only like 3%. Sometimes it's like 8 to 10%, depending on where the market maker is positioned, but it always takes a pullback. So this time we're going to look at where we think this is all going. Now, the revealing thing is this. The revealing thing is that every time when there has been war, basically, you can almost assume that people should buy the dip, right? Not always, like not this one, but what's the difference? In fact, this, we're just being cheeky here. We call it buy the invasion. Invasion of Vietnam, buy the invasion. It dips by the Gulf War with Iraq, buy the invasion, buy the dip. Iraq War, this is 2.0 with George Bush Jr., right? Buy the invasion, buy the dip. Crimean crisis, right? When Russia went into Crimea, buy the dip, buy the invasion. That was the Russian invasion, by the way. The only exception here is Afghanistan War, which was October. But we're going to say that this was actually the overall bear market of the dot-com bubble bursting, right? So even without this Afghan war situation, we're still going to see this on the charts. It's just that this drop here may not be that big, but it's going to go down. So then you think, oh, well, that's really easy, Pablo. Then I get the situation now. Then basically buy every war dip. Is this true or not? Is this true or not? By the way, this is the SP 500. This is the SP 500, and it applies to Bitcoin as well. If SP 500 was to go up this much over the next year or two, right? Then where do you think Bitcoin's headed? It's obviously headed for a blow off top. But however, this time is different. So first of all, I've done this tally of past US wars when I was just a junior at a major investment bank, working on the trading desk as a trainee trader. And I found that out of the 24 wars that US was involved in since founding of it as a nation, 23 of them ended with the US stock market higher after 9 months, right? There was only one exception. So, but this time it's very different because this time oil price could spike and that would be huge. But how is this war going to play out and how would Bitcoin and stocks be affected? Before I answer that question, first let's answer the question of which crypto exchange does Pablo He-Man use? Well, Pablo uses this exchange that's non-KYC. That means you don't need to show any ID. That means the exchange can't even see who you are. So that's why Pablo's made this deal with them. And for my followers, only on this link, deposit and get a 20% bonus, right? That means the IRS can't see you. The tax office can't see you. The FBI, CIA, nobody can see you. Just by depositing $100 and get $20 trading bonus. Deposit $1,000 and get 200 USDT in futures trading bonus, right? Just by trading volume, win a MacBook Pro, iPhone 16, Apple Watch, lots of great prizes. Even just getting to the top 20 will get you nice prizes. But this is limited time only. It finishes on 11th of July. Okay, now if you're watching this on YouTube, then the link is in the description below. The link is in the description below. But if you're watching it on any other platform, that's okay. Just click on my profile page and it'll take you straight to this Stan link here, which is my link tree. And this should be the first deal that pops up because this is a great deal. Okay, let's get back to the markets. But remember, folks, it's only on the Pablo He-Man link. All right. So with Bitcoin, in the short term, I've been saying that we are going to bounce off this 103.5 level support, right? Small bounce. I think we're looking at a breakdown situation. I think this is going to break down, and we're going to test this 100K area. I've been calling for a mid-90s for a while now. It has been just swinging sideways, and that's what I've been saying. I think we're going to get Bitcoin to swing sideways more. Now, the buy the dip or buy the invasion situation. First of all, there is no dip and there is no invasion to speak of yet. This is SP 500. So if you want to buy this dip, if you want to buy the invasion, buy the invasion, buy the invasion, and this time, first of all, there's not going to be an invasion because I'm predicting there's not going to be any boots on the ground from the US. But if you want to buy the war this time, we haven't had a big dip yet. Like, basically, we're hovering since last Friday when the news was announced. We're hovering around this 600 area on the SP 500. Like a dip would be something like even 585. That would be a small dip. But if it went to 565, that would be like, you would probably call that a dip. If that happened and Bitcoin went to like mid-90s, low 90s, in an extreme scenario, if both sides, Iran and Israel, are threatening each other with nukes, and US is going to put boots on the ground, that means soldiers actually in the field, then we could look at even 80s for Bitcoin, and we could wick down through here, something like this. Like, that's an extreme scenario. But extreme scenarios do happen in wars, and Trump does like to threaten people every now and then. He's part of his art of the deal. So I've explained this before, just for folks who are not in my Discord and who haven't been watching my past videos. I'll explain this one more time. The reason why this war is different is because this is Iran, and this little body of water here is called the Hormuz Strait. Here is Israel. They can lob missiles at each other all day, and chances are they could do this for like years, right? There is a chance the Iranian leadership could collapse. There is a chance that Israel may not be able to withstand because it's so small, such a small geographical area. The bombing, and Israel could go down, and they change the leadership as well. They get Netanyahu out of there, but both countries will still stand to a large extent. The key is Iran, if it chokes off the oil supply here, plant just sea mines in this area. Now look at all the oil countries around here. You've got UAE, you've got Qatar, Bahrain, Kuwait, Iran, Saudi Arabia, right? That's like parts of Syria. That's like, and Iran itself, of course. That's basically like, what, 40% of the world's oil supply. But however, only 20% comes out of there. Some of it comes out this way and goes through the Suez Canal to go out there. But that's 20 to 25% of the world's oil supply and gas supply. If that gets choked, obviously, this is going to be a very different situation. In fact, it's going to be more like the war United States experienced in the 1970s. I'll show you guys the war in the 1970s. There was about 5 wars all in the Middle East, all between Israel and other Arabic countries, and somehow Israel managed to survive all of it with the help of the United States, of course. And you can call it a win or you can call it a draw. I don't want to offend people, but that's what happened. There were 5 wars, and the Arab countries were really angry. So they basically declared an oil embargo to the United States for helping Israel. So during this time, starting from like 1966, basically you saw that the Dow Jones, that was the main index to measure United States back then, basically stuck at 1,000 point and just went down 1, 2, 3, 4, 5, maybe even call that 6 times, and just never went up because oil prices went up 3x. Like, imagine, like, well, what's oil price in the US right now? $4 a gallon, $4.50 a gallon. Well, just imagine if that 3x is to like $13, $14 a gallon. What would the US economy be like? That's what happened in the late 60s and all of the 70s. So it went from 1,000 down to, what's this? 563. So 45% drop. This would have been like a 30% drop. They kept on having these 20% drop. Like basically that's what happened to the US economy. So we say, oh, look, always buy the invasion, buy the invasion, buy the invasion, buy the dip. I always trust America to win the war, and therefore its stock market is going to keep on going up. But what happens when you choke off 20% of the world's oil supply and oil prices spike? You could have a repeat of the 70s situation. And the 70s situation is kind of similar because, look at this. This was coming out of the Great Depression and then coming out of World War II. This was basically a monstrous rally into a 20-year, like a 20, 30-year rally, and then the oil embargoes hit and then goes sideways. So this, look at this. This is basically 2000 .com bubble. It doesn't show up as much on the Dow Jones, but if you look at NASDAQ, it was like down here. 2009 GFC, and then you've got a 16-year major bull run, right? Up only bull run, and then imagine an oil thing hits. It would go sideways as well at best, and probably we see like a 50% to even 70% crash on the US stock market. But that would happen over 3 years. So before then, I think we get a blow off top, something like this. Why do I think we're going to get a blow off top in the short term? Well, because of this. Because US economy is actually still doing quite well. So this is what they call the economic surprise index. And for folks in my Discord and for folks in my who've been watching me, you know I like to use the economic surprise index because it doesn't measure what the economy does. It measures the economic indicators that come out. How much do they surprise the economists who are predicting those results? So, for example, this thick blue line, this dark blue line is the economic surprise index. When it is below zero, here's zero. When it's below zero, like this, right, like this, that means it's coming up with more negative surprises than positive surprises. And when that happens, basically, right, when that happens, then we see the light blue line. Hang on one sec. Okay. So basically, it's the light blue line. When the light blue line goes down, the economic surprise goes down, then basically the leading index, right, the leading index which measures the US economy goes down. When this blue line goes up, right, and then the leading index goes up as well. So basically, now we are seeing the high correlation between these two. So basically, next few months, it's very unlikely for the economic surprise index to go down this way, right? It's at just below zero right now, but it's more likely, right, looking at this chart, for the economic surprise index to go up this way. If it goes up, then guess what happens? Then that means the economic results are going to come out better than expected. That's literally what this index means. That means basically the inflation is going to be lower than expected, GDP is going to be higher than expected, and employment is going to be better than expected, all of which. And when that happens, basically going into the next few months, the next few months, then what happens is, then basically up to about September, we could have this run up to about September, stock market is going to look good. Stock market is going to look good. Economy looks good, so stock market looks good. And my prediction is for a blow-off top into September to November, and we top somewhere in between September to November, and it could be a repeat of the 70s. It could be like one of these bad boys, right? Major crash scenario, or a repeat of the 70s where it goes nowhere. Like after this up only bull run, this was how long? This was from here, from 42 to 66, 24-year up only bull run, and then it just goes nowhere. But remember, yeah, you're like, oh, the market went nowhere. But inflation during this period went up like what? 3 or 4x. So your portfolio basically probably two to 2.5x. Your portfolio went down like 70-80% just by holding it during those 10 years. But what's going to happen to crypto? Well, crypto, as I've been saying, next few months, I am still thinking the blow off top scenario, unless some sort of catastrophic war scenario comes out of Iran and Israel. Just to update you guys, this is ETH staking. ETH staking is back now at an all-time high, right? We just saw ETH whale buying shot up to like a 6-year high yesterday in my video, and now we're saying ETH staking is going to an all-time high. Something very unusual is happening with ETH. For ETH staking to do this, it's not the small retail guys holding ETH and staking it. This is the whales staking. They're buying it and they're staking it, and yet prices going sideways in a bull flag. I think we get one more dip. We get a big scare around 2,300, high 22s, like 2280, 2219, then boom, big move up to like next target 3,100. Okay, thank you for tuning in, guys. I'll catch you guys next episode.